Political inflation cannot be cured with monetary policy. This is what we've been telling you for the last 13 months. And here 13 Market Moves. On January 1st, 2024, we have recorded a video explaining the stagflation case for 2024 that could result in a crash. So stagflation type crash. We have compared on multiple videos current events to that of 1973, 1974. We have outlined a bullish case for oil higher, which was exactly was a part of the reason why the market collapsed in 1973, 1974. Most of the people don't remember this crash, but it is officially the 7th biggest crash in the United States history. What is even crazier is that the market crashed in 1973, 1974 in the United States by as much as 50%. But what happened in England was even worse. The market in England crashed 73%. So all of this was not because what was taking place in the United States. But if you look at the current market events, this is exactly what's happening now in England. England is experiencing some of the craziest market conditions right now when it comes to their real estate market. And real estate market is collapsing. You think commercial real estate in the United States is collapsing. England is fucked, okay? The real estate in England is totally fucked. And this was the same thing that was taking place in 1973, 1974 in England. The whole crisis began by England real estate completely falling out, which caused a domino effect for a lot of other things. There was things like Bretton Woods and other things which we're not going to get into details in this video. I just want you guys to have this perspective in mind that we have been right on everything as far as the macro conditions going into 2024. Everyone was talking about how we're going to have lower inflation. Well, we have each day, we have it now in black and white how everyone was wrong, but yet somehow we saw it and the market still has not collapsed. Well, if you put the two and two together, the next thing that's about to happen is that the market collapse. And let me just shed a little bit of light on exactly what I mean in black and white. I mean, clearly, the government can make up a lot of these economic reports. They can tell you, hey, the inflation is under control, but you cannot make this up, right? So, in black and white, due to ongoing Houthis attack in Red Sea and Panama Canal drop, okay, you get, U.S. companies are paying more for ocean freights with rates as much as up 75 to 150% year to date. So, you can't, there's not an economic report that is highlighting this, but if the prices on shipping are up 75% to 150%, if you review the videos we posted around January 1st, 2024, within the first week of 2024, you will find out that this is exactly what we have referenced as the cause for ongoing inflation, okay? All this World War III rhetoric that is prevailing, the international arena at this moment, okay, this is the main cause for inflation higher. So there would be no situation in the Red Sea if not for all the political agenda. So this is a politically driven inflation that certain countries impose upon themselves as a result of their political agenda, not economic agenda. So we are in this world of deglobalization, and you will see this story continue. So this was the root of our base case why inflation was going to continue higher. But if you study the report of this top 5 shipping company in the world, you would think that those higher revenues, okay, that higher amounts that people are spending to pay them for delivering would translate into a stronger bottom line for these companies. But yet, it is exactly the opposite, which is why, again, this is stagflation. Stagflation is when Prices are going higher, inflation is going higher, but yet companies and country citizens are not doing better as a result of that. In the opposite, they're doing worse, which means economic slowdown. In terms of this micro examination of this particular company, Lloyd, okay, this is what they're saying. They see a steep drop to net profit, okay, as a result of higher costs. So this word cost, okay, this is the curse word of 2024, 2025 moving forward. Okay, we could see this being the curse word for the next 7 to 8 years, because that's where inflation begins to spike in 1973 from like around 2-3%, and it doesn't stop. It goes to 19%, and you know that number varies clearly. I mean, it gets even worse in countries like United Kingdom. But the point is, this ball, once it's in motion, it is unstoppable. You got crazy guys like Macron in France that's trying to escalate the war in Ukraine. This war in Israel's been going on now for an insane amount of months, and it's all that stuff is going to continue. So this deglobalization, World War III rhetoric is going to prevail, and you're going to see that costs of doing business across the board will spike at a faster speed than the amount of revenues that the company. So even a 75 to 150% increase in revenues is not allowing for the company to lock this in a positive bottom line. It is actually so bad that the company is slashing the dividend. Now, companies don't slash dividends when they're doing good, okay? But it's often the first thing that the company, slashing the dividend is like the first canary in the gold mine, right? It tells you, hey, shit is about to hit the fan. And so first the company will cut a dividend, then it's going to start cutting some workers, okay? Then before you know it, they call for a restructuring, which restructuring is just a nice word for a fucking bankruptcy, okay? So that's basically, we got it in black and white. Like, everybody was saying, no, well, the shipping costs are going to go down, inflation's going to come down. And we're like 10 videos, stagflation, motherfucker, where y'all at? It's going to go higher. So it's official, guys. We didn't have to wait a whole year. I mean, it's official. It's the first 60 days, okay? If shipping costs are up, okay, it basically tells you, well, prices are going to continue going higher on everything that you buy at a grocery store, everything that you buy on Amazon, anything that has to do with retail sales, okay, the costs, a part of whatever you're buying, internally there is a cost that is associated with transporting those goods. So it ends up higher transportation costs. Consider United States no longer makes 90% of their stuff, okay, it's going to translate into a higher cost across the board. But what also happens as a result, right, if you just study this for a minute longer, you're going to understand, okay, well, higher costs, how these companies, what is the higher cost? Well, they have to travel further, which means they have to use a lot more oil to deliver the same goods. That actually spikes the demand for oil. Multiple videos being bullish on oil here at 13 Market Moves. We've posted a couple of crazy videos saying oil can hit 150, 200, which in the beginning of the year, most of the people were bearish on oil. Okay, we've nailed some short-term moves in oil where there were possibility of a P stock. We've nailed that move in oil downward, but recently, you guys know, we've been highly bullish on oil. And oil is, despite of the weakness of the market, let's bring up the. So oil, very, very solid pattern, despite of some weaknesses in the market in the last couple of days, right? Oil is strong. Oil is strong, and it's at a pattern where it can easily break out at any given moment to the upside, right? I mean, this is solid uptrend. Before you know it, I think the big move in oil is going to take place when oil breaks above 82. And then before you know, shit, oil is at 90, 100, summertime, 120. Okay, so this is your fucking inflation in one chart, okay, that impacts everything, guys. So when we're talking about black and white, there it is. It's official, okay? The shipping rates are higher. At the same time, the company that should benefit from it is actually cutting a dividend. And before you know, there's going to be layoffs. Before you know, there's going to be a bankruptcy. That's how the cookie crumbles every instance throughout the history. So there's the case for stagflation. It's official. It's in black and white. It's been confirmed, okay, that will easily cause a lot of people to reprice the market, rethink the market, because at some point, I mean, people's got to realize, well, hey, all these fake economic reports, this miscalculation on behalf of market participants that inflation is going lower. When you get something like this in black and white, it's not going fucking lower. There's no way at this point Biden administration can come up, well, clearly they can come up with another fake report that says, well, inflation is not that high, but nobody's going to fucking believe it. Okay, just like nobody's going to believe the next job report because they're going to say, well, the job situation is great. We've created this many fucking jobs. And then the next month they're going to revise it. And for all I know, the job number probably has been negative for months. They're just not telling you that. And so there's a moment, okay, at which the market just doesn't, it doesn't matter what type of economic reports that could be showed, the market's just going to fucking sell off, okay? They can paint a rosy picture, the market's going to sell off. They can actually come to terms and say, hey, well, actually shit is bad, while in reality shit is a lot worse. But the only kind of market reaction that you will get is a sharp sell-off. So there's going to be some wild bounces, which, by the way, don't miss the next video because it's going to be devoted to bounces in the current conditions that will help you outperform the market next week, guys. But just understand, this is real. Everything we've talked about that nobody believed was remotely true, now it is officially fucking true. It is here. And so we've been correct on the macro part of where the world is going. And certainly that's going to lead us to be right about where the charts are going. And the charts have been self-evident with the 89 different bear divergences that we have spotted on the charts, which means the rollover is a lot closer. But there's more and more people are going to come to a realization that their case of why they stayed bullish the market over the course of last 5 months is not valid. The error has been made on behalf of many market participants, and that's going to lead to an area of great mispricing, guys. So with that said, 1973, 1974 type crash is very, very real, and it's just around the corner. So 1973, 1974, again, it's higher prices, higher inflation, higher costs, which leads to economic slowdown, less employment, okay, higher costs, inferior economic conditions, particularly in 1973, 1974, in that time frame, GDP in the United States dropped from over 7% to being negative 2%. And we're likely to get to a point where Biden administration is no longer going to be able to hide the fact that GDP is totally going in the opposite direction from what they've been trying to masquerade here. So guys, be ready. The market is at the critical moment of realizing that 1973, 1974 stagnation is where we're going 2024, 2025. And we're about to enter a period of a great mispricing of assets to where a lot of things are going to be collapsing. And this type of collapse, now the chart of 1973, 1974, as you can see, it looks like it's a gradual drop. But considering where the market is at currently, okay, we can get a situation of a flash crash that could be comparable to that of May 6, 2010, where the market drops by an insane amount within literally 13 minutes. And as a trader, you cannot afford to miss that huge payout on the short side. And therefore, the best recommendation is to call 13mmtv.com, trade this market with great diligence and certainty with a 13 Market Moves coach. We have traders here, been trading for years, trained by me, trained by our 13 Market Moves curriculum, okay, who are on the lookout for the turning moment, okay, which could come at any given trading day at this point. And the advantage of trading with a coach is you will not miss that 13-minute drop that could amount to like 500 points in S&P 500. That could be a 200x trade for you, 300x trade. That could be a key pivotal moment for you in your trading career. And for most of you, that's exactly, okay, what you've been looking for. You just didn't know where exactly to look for it. But now that you know that this is here and this is real, the only thing you need to do is to get your entry perfectly and your exit perfectly. Because there will be bounces. There will be fierce bounces in this market as the market is spiraling lower. So overall move is going to be lower, but some of those bounces, okay, they are to be targeted for short selling entries. And yet those are most of the moments where most of the short sellers are going to be jumping out of those positions. So if you can just improve in these two areas, you will beat this market in 2024. In a way, you will beat this market in such a profound way. For most of the traders, this is going to be a dream come true. So if you're ready for your dream to come a reality, go to 13mmtv.com, click the big orange button, participate in the challenge, 10x your account in next 10 trading days. Let's roll. Begin to trade with a 13 Market Moves coach today.